Hi there, welcome to Kneppy Invests. Continuing on the video series of me covering every single company that did achieve an operational cash flow positive June quarter, I turned my attentions to a company called Clinuvel. For full disclosure purposes, I am a shareholder of this company right now. I have been a shareholder on and off over the past 4 or 5 years, just buying in when I thought the share price was low, selling when it's a little bit higher. Now, when Clinuvel released their financial year 21 results on the 26th of August, I decided to take a position on a permanent basis. I will not sell out of these shares for a long time, hopefully, because I do believe, in my opinion, the potential of this company is significant over the next decade, 20 years, and I just want to be a part of the Clinuvel journey during that time frame. So in this video, I'm going to look at their financial year 21 results and the last two Appendix 4Cs that they released for the March quarter and the June quarter. Now, before we get there, let's have a look at some of the facts in regards to this company. Clinuvel is a biopharmaceutical company on the ASX, and they have one main product called SCENESSE, spelled SCENESSE. SCENESSE is a treatment designed for EPP. I won't try to pronounce what the actual condition is, but it can be shortened to EPP. And those affected by EPP have a hypersensitivity to light, in particular sunlight. So those who are affected by EPP, when they're introduced to any sort of light, particularly sunlight, that can cause burns, pains, inflammation, scarring, a whole host of really bad sort of stuff. And SCENESSE is the initial treatment for EPP. So a lot of those who are affected by EPP have shown significant interest in this treatment. I have looked at and watched numerous videos over the past 10 years, and there's been a lot of excitement. That's why SCENESSE has been gaining traction around the world. Introduced in Europe about 5 years ago, and it has been accepted into USA. I think they started selling SCENESSE April 2020, so only been selling in USA for about 18 months. Clinuvel was founded in 1987 and listed on the 13th of February 2001. And when I do look at the management team of Clinuvel, I always come away quite impressed, particularly the CEO, Dr. Philip Volgen, originally from Denmark, if I remember correctly. He's been the CEO of Clinuvel since 2005. So a lot of continuity when it comes to the management team of Clinuvel. He also has a fair bit of skin in the game, 3.2 million shares. And when you consider the share price of Clinuvel right now is $40, that means he has over $100 million invested in Clinuvel right now. So decisions he makes in regards to the future of this company will be definitely affecting him because of his shareholding in the company. Now, he has sold some shares in the past 8 months, but it's been very small amounts. I do not worry when CEOs or directors sell out of some shares because they can be selling out for numerous reasons. And I can always come back to the example of Marcus Blackmore, who sold out some shares of Blackmore's about 5, 6, 7 years ago at $20 to buy a yacht. And then the share price of Blackmore's went from $20 to $200 in a few years. So don't always be concerned when CEOs or directors sell out of some of their shares. The major shareholders or some of the major shareholders of Clinuvel is interesting. The Sovereign Bank of Norway is a major shareholder of Clinuvel. Also, the hedge fund BlackRock, I think it is a hedge fund, BlackRock, but a very famous name when it comes to funds. The market cap of Clinuvel, $1.9 billion at $40. So you do have to pay a bit of a premium for this company. And we'll look at some of the evaluation ratios in the next slide. And the ticker code for Clinuvel is CUV. Now let's have a look at some of their financial year 21 results, and not only based off these results, but also some of the commentary I did read. I decided to take a permanent position in Clinuvel on this day. I sometimes do wait a little bit of time to take a position, but I was so impressed with some of these results and the commentary from management, I just decided I need to take a position in this company right away. Revenue $48 million, up 43% from financial year 20. Operating cash flow positive, $19.3 million, up 36%. Profit after tax, $24.7, up 64%. That means earnings per share of Clinuvel, 50 cents. And when you calculate PE ratio and enterprise value to operating cash flow at $40, you do get 80 and 94. And those are quite high numbers for those ratios. So again, you do have to pay for high quality companies right now. Now those ratios aren't quite as high as a company like Pro Medicus. If I remember correctly, Pro Medicus' market cap is over $6 billion with revenue of about $70 million and operating cash flow and net profit after tax a little bit more than Clinuvel. However, Pro Medicus growth rate's not quite as high as Clinuvel right now. And I do think there is potential we might see significant growth in these numbers over the next 2 years as SCENESSE gains traction in the United States. I would not be surprised to see revenue well over $100 million in 2023. And because there's quite a bit of margins right now in this business, in the selling of SCENESSE, that means a lot of that additional revenue will go down to the bottom line. The other interesting thing is they haven't raised the prices of SCENESSE in Europe in the last 5 years, and they're going to be doing that. So even more margins will be coming into this business in the next few years. Now I turn my attention to the last two Appendix 4Cs for Clinuvel, starting with the March quarter. I always start off with receipts from customers. Now, looking at 1 quarter's receipts in isolation tells you nothing. You need to know the trend through time. And we'll look at the trend through time in receipts in 2 slides' time. But for the March quarter, receipts to customers for Clinuvel, $6.5 million, and they were operational cash flow positive for that quarter by $2 million. And that's really important because traditionally the December quarter and the March quarter are the worst quarters for Clinuvel. I'll talk about why when we look at the receipts history in 2 slides' time. But plenty of cash on hand for Clinuvel, and they finished the March quarter with $75 million of cash. Now let's have a look at the June quarter to see how the company did travel over the next 3 months. Very impressive June quarter results for Clinuvel, but some of this is to be expected, which I'll talk about in the next slide. Receipts to customers more than doubled to $14.9 million. And because some of that cost didn't increase all that much, although product manufacturing and operating costs and staff costs almost doubled from the March quarter, but administration and corporate costs actually fell by half. And the main thing to take away from this is receipts from customers more than doubled, and the cost in the business didn't double. So that means the company was way more operational cash flow positive than they were in the March quarter. And they were operational cash flow positive by $8.1 million. And that's really important for this company moving forward. And the other thing is, which I don't show you here, is they didn't spend much money on investing and financing activities, which meant the amount of money, $8.1 million, they did produce in operations fell to the bottom line. And the cash in the business grew by $7.8 million and finished the quarter at $82.7 million. That's very important because that gives management a bit of flexibility for growth initiatives in the future. So when a company does produce money in operations, there's a lot of things they can do with that money. They can give the shareholders a dividend, have a share buyback, spend money on research and development or other growth initiatives. And that's a very important thing that the management of not only Clinuvel, but a lot of companies have to decide. What are they going to do with the cash the company produces in their operations? And I do think the management of Clinuvel have some really good ideas. Just have a look at some of their commentary they give us. Have a look at their, I think it was their webinar in relation to the 4-year results. A lot of information out there. You can actually get a glean on what this management team is thinking about in regards to the cash they have on hand right now. I always like to see the receipts history for a company to see what sort of trend we have. I like to have positive upwards trend in receipts through time or revenue, because if a company can't grow their revenue, then how are they going to grow their profit, their operating cash flow, unless they decrease costs? But decreasing costs only goes so far. You have to increase revenue. It's one of the most important things when you are analyzing a company. Some people totally ignore that, but I think it is one of the most important things. When we do go back to June quarter 2013, where I started following Clinuvel, we didn't see much growth in the receipts over the next 3 years. And it wasn't until 2016 when Clinuvel started selling SCENESSE into Europe where we started to see receipts growing. But a real notable thing about this receipts history is there is a bit of seasonality here. And the best quarters when it comes to receipts for Clinuvel is the summer Northern Hemisphere quarters, which would be the June and September quarters. And the worst quarters tend to be the winter Northern Hemisphere months, which is the December and March quarters. And there is actually a reason behind that. It all comes to how SCENESSE is administered. So there are implants, and one implant is injected every 2 months in spring and summer. And the recommended amount of implants is about 3 per year, at a max of about 4. That implant is absorbed by the body within 50 to 60 days, hence every 2 months. And because EPP is all about sensitivity to sunlight, you want protection during the summer months. That's when you want the maximum protection. And that's why there is a bit of seasonality when it comes to receipts. But in saying that and reading some of the commentary from management, as they gain traction in the United States, this sort of treatment or the administration of the implants in the United States is going to be a little bit different. And it won't be administered like they have been doing in Europe. So this seasonality will be not quite as pronounced moving forward. And that is a good thing. I would prefer a little bit more of a smooth upwards trend in receipts. But the market knows this about Clinuvel. And whenever they see the December or March quarter receipts, they don't panic. They know we're going to see stellar receipts in the 2 summer quarters in the Northern Hemisphere. And we definitely saw that in the June quarter in 21 with $14.9 million of receipts. Now, I did calculate the compound quarterly growth rate from June quarter 2013. We do see 12% growth per quarter. Now, I wanted to ignore that first 3 years until they started selling SCENESSE into Europe. And if you do ignore those first 3 years, over the last 5 years, we still see growth rate in receipts at 13% per quarter. That's per quarter, that's not per year. If we saw that sort of growth rate in receipts per year, I would be impressed, but this is per quarter. To finish with Clinuvel, I'm going to look at 2 charts. The first chart here is the monthly chart going back to 2006. I don't usually look at the monthly chart. I focus mostly on the weekly chart and then close with the daily chart. But I just wanted to see what's been happening with the share price of Clinuvel over the past 15 years. And there was a period here between about 2008 and 2015 or 16 where the market wasn't that excited about this company. And the share price was drifting down on decreasing volume when the company was going through their clinical trials and studies of SCENESSE before they went into production and selling SCENESSE into Europe, which happened in 2016. And around that time, 2015-16, is when the market started getting a little bit more excited about this company. And the share price went from this long-term period where not much was happening to a start of a new long-term uptrend. And the share price low in Clinuvel was $1 towards the end of 2014, start of 2015. So if you had the insight to buy into Clinuvel at that point in time, your returns have been phenomenal, because we're seeing since 2016 the share price in a long-term uptrend. Only period where we saw the share price come under pressure was during the COVID-19 financial panic when the share price fell all the way to $13. But definitely a long-term uptrend with the share price. And right now, their share price is at an almost almost at an all-time high. We did see a brief period during 2019, I think it was October, where the share price briefly got to $45, but then fell back on some selling. So now we've had a look at the long-term chart. And probably the other thing to point out here is massive increase in volume in 2018 and 19. That also tells you the market is getting excited, because when the share price is increasing and the volume is increasing as well, there is more trading. There's more participants in the market willing to buy in at higher prices. Fund managers are getting excited. They're willing to buy and take a position in the company. We have seen the volume come back during 2020 and 2021. But when we look at the daily chart, we have seen a bit of a change in the volume trading in Clinuvel since they released their full-year results on the 22nd or the 26th of August. So let's have a look at the daily chart right now, and we'll see the massive increase in volume over the past few weeks. As we turn our attention to the daily chart, going back just prior to the COVID-19 financial panic. And the reason I wanted to show you what happened during the COVID-19 financial panic is just the volume traded in Clinuvel leading up to that bottom. Massive amount of volume, a lot of interest in that company. Funds taking positions when the share price fell to a low of around about $13. Would have been about March 23rd. And then we saw the V-shaped recovery in the share price. Share price improved from $13 to a top of about $27.28, so a double in the share price. And during that period, we also saw the volume decrease. And then we saw a long period of time when the share price just went sideways, about a 9-month period, about a 9 to 11-month period, where the share price just went sideways until we saw a little bit of excitement come in to Clinuvel around March this year. That excitement pushed the share price from $20 to $30. Then we saw another period of time, about a 5-month period, the share price just went sideways, trading in a range between about $27 and $31. Not a lot of volume, so not a lot of interest in Clinuvel. And it wasn't until August 26, when Clinuvel released their full-year results, that the market got excited. And we saw massive volume come in, significant volume increase from what we've been seeing over the past 18 months. The last time we saw this sort of volume was back in the COVID-19 financial panic. But this sort of volume was people, investors, and more than likely it was a lot of fund managers wanting to take position because of what they read in the financial year 21 results. And when I did read those results, I wanted to take a position myself. So this makes sense when I saw the reaction from the market to the financial year 21 results. The share price has increased from $28 to a current share price of $40. So we're almost at a 50% rise in the share price over about a 5-day trading period. Probably the other thing I should mention when it comes to the release of their results and the market reaction, there was a bit of a delay. When I bought into Clinuvel on the day they released the results, the share price did rise, but I wasn't a significant amount. It was the following day and then the subsequent days after that where we saw significant action, significant increases in the share price. And what that is telling me is a lot of fund managers, a lot of professionals took time to digest the results. So it took them 24 hours to look at the numbers and come away really impressed and wanting to take a position in this company. That's really good for the future of Clinuvel moving forward. These fund managers, these professionals took their time, and what they found in the financial year 21 results was enough for them to take positions. And that's why the share price has risen by almost 50% in 5 trading days. If you do like this video series of me covering every single company that did release an operational cash flow positive June quarter, look out for videos on these 4 companies in the next week and a bit. New Century Resources and Crude Energy, and a mining services company called Dynamic Drill and Blast. And the other company I'll be looking at is Mosaic Brands. Now, at the time I'm doing this video on Saturday, what's the date today? 4th of September, Mosaic Brands is in a trading hold because they want to do a capital raising. I have been a holder of Mosaic Brands about a year ago, and the main reason I sold out of Mosaic Brands because I was concerned about their future, and I'm even more concerned right now. So I'll talk about why I'm concerned when I do a video on that company in about a week's time. that's all I have for this June quarter Appendix 4C and financial year 21 results video for Clinuvel. If you do have any questions, any comments, thoughts about this company, if you know more about this company than I do, I'd love to hear your thoughts, because even though I do know a little bit, there's way more I want to know, particularly around the future products that this company is thinking about getting into production in the next 5 to 10 years. I'd love to hear your thoughts about that. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.